Okay, so this is just a sample of some of the different penalties that the IRS can assess on taxpayers. Last chapter we were talking about tax preparer penalties. These are taxpayer penalties. So they'll charge interest on any penalties if you don't pay that penalty within a certain period of time. Failure to file a tax return. So if you don't file, you were supposed to file a tax return and you didn't, you'll get a penalty for not filing it. Failure to pay tax. That's different from filing the tax return. If you didn't pay the tax that you were supposed to pay, you'll get a penalty for that. You'll get interest as well. Interest on the penalty, interest on the tax. They'll charge as much as they can. Failure to pay estimated taxes. So if you should have paid estimated taxes and you didn't, then you'll get a penalty for not doing that. Substantial underpayment of tax liability. So if it was an accuracy related penalty, this means you made a huge mistake and you substantially underpay. I don't know what substantial is. I don't know what that number would be, but there's so they can, and all of these can stack. They can stack all of these penalties. So if you failed to pay tax and you failed to pay estimated taxes and it was substantial, they can just stack them all on top of each other. Fraud penalties, so if that was intentional, you intentionally filed a fraudulent return. Erroneous claim for a refund or a credit penalty. So those refundable credits, like I said, there's a lot of scrutiny of those refundable credits because they're so valuable. If you're found to have claimed one and you weren't entitled to it, then there are special penalties for that as well. That's the Earned Income Credit, American Opportunity Credit, and Child Tax Credit. So those are special credits that they pay close attention to. Let's see. Interest charges. So this is, you may need this for some of the problems in Chapter 2, FYI. These percentages when you're doing some calculations. So when you file an extension of your tax return, it does not extend the time to pay. You still have to pay on time. And if you don't pay on time and you owed, they will start charging you interest for it. So rate charge is a federal short-term rate plus 3 percentage points. Here are the rates that are set quarterly. These are annualized. So you can see, ooh, look, there's our inflation. Yep. So we were down to 3, COVID, down, and now we're back up to 8. So failure to file, these are just the specifics about each of the penalties. So if you don't file a return by the due date plus extensions, you pay a failure to file penalty, which is 5% of the amount due of tax due on the return. If it's less than 1 month, but for each additional month or fraction of a month, so even if it's 1 day and 1 month, that counts as 2 months, they will add an additional 5% penalty up to a maximum of 25%. Any income tax return filed within 60 days is subject to a minimum penalty, $485, or the amount of tax required on the return, whichever is less. They're not messing around, they want it. If it's due to fraud, the penalty is 15% a month. If it's due to fraud, you've got bigger problems than your penalty probably. So here's an example of a calculation. I'm not going to go through that in detail. Failure to file. Failure to pay tax. So that was failure to file a return. This is failure to pay tax. So it's 0.5% of the tax shown on the return for each month that the tax is unpaid up to a maximum of 25%. Like I said, it's stacked. So if you failed to file and you failed to pay, now you got 2 penalties that you're dealing with. Actually for this one, it's not stacked. Some of them are, so the maximum monthly is 5% when both apply. Some of them are stacked. I guess this one is not. They will abate the failure to pay penalty if the taxpayer can show reasonable cause. That was a big part of my job too, was writing letters to the IRS or calling them on behalf of taxpayers, asking them to abate or forgive penalties. Oftentimes the first time they will do that. They will abate they never abate the interest, but they would oftentimes abate the penalty. And this is something a lot of taxpayers don't realize. They just pay. Also, they'll get a notice from the IRS and they'll just pay it. They'll assume the IRS is right. IRS is not always right. So a lot of times it pays to have a professional take a look at what the notice is, or the letter that you received, and whether or not they're actually correct in that. They don't have all the information. They only have what they receive, their copies of tax forms, and not everything that goes on a tax form is attached to a form. So they're not always right. Oh, let's see what else. So here's an example of a calculation as well. I'm not going to go, for sake of time, I'm not going to go through that. Penalty for failure to pay estimated tax. So just another, they talk about this. This is called a safe harbor, by the way. This, you got to pay in at least 90% of the current year or 100% of last year's. That's called a safe harbor, to save you from having to pay penalties. There's no penalty if the tax due is less than $1,000. So they kind of give you a $1,000 buffer there. There's accuracy related penalties, fraud penalties, which are big ones. I would think that you're most concerned in fraud related penalties with prison time that may be associated with it, because there are criminal penalties apply only to tax evasion, which is an attempt to evade or defeat tax. Willful failure to collect or pay tax, that's for employers if they have not, did not withhold on their employees, or did not remit the taxes that were withheld, and willful failure to file a return. So you only get the criminal charges if you intended to evade that stuff. 20% penalty on the any disallowed amount of a claim for a refund or credit of income if it's found to be excessive. Again, I don't know what that definition is. It exceeds the amount of the allowable claim. All right, all sorts of different penalties that can be assessed. I know I went through that fast. Sorry. It's